right in here, you have a fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. This candle's high right here. If you draw a line out, this is institutional order flow entry drill. Institutional order flow entry drill is where the market just trades just a little bit inside the fair value gap and then drops. That's what that is. It's not a full closure of the gap. It just goes in a little bit and then go. That's why when you see me pyramiding and when I'm doing my trade executions, every single time I do a entry into the fair value gap, I'm always trying to pyramid right there. Because every time I try to fancy dance and try to get the midpoint, consequent encroachment, I rarely ever get it. So that may be where I believe that the ideal entry should be for me, but I don't care about the couple ticks that I might be losing in terms of profit or saving in a stop loss. That's not going to make or break the idea for a trade for me. So as it enters the fair value gap, institutional order flow entry drill, all that means is you're entering just the smallest little bit inside of a fair value gap, and you're entering based on that within a narrative or directional bias with the belief that even if it does close in the fair value gap entirely, it doesn't make a difference. It won't hurt me. I'm not going to take the full position there. I'm going to enter a partial of something like a pyramid. So if I'm going to enter it as a full 100%, this is the first time I'm getting in a trade because maybe it's already been moved for a while. I'm not afraid of looking at that and getting short, where some of you might think, oh, we're down here near support. Look, we're down here by support. It's probably going to go up now because, that's probably what's likely to happen when they have no idea, because of what I've explained here on the higher time frame, they're lost. They're trying to go long in euro. They're trying to find longs in this market when your focus should be filtering out longs, only focusing on shorts. And every time the market rallies, your thought process should be, this is a suspect rally. Why is it going up? Here's the two reasons, and the only two reasons it is going up. You ready? The only reason why the market's going to rally and the market's bearish, right? You're expecting prices to go lower. Every single time that the market rallies, it's going up to tag short-term highs for buy stops, or it's returning to reprice to an inefficiency. This high here ran above this high. This high here ran above this high. See that small little separation in here? Very small. It overshoots it in here. That's fine. Breaks lower. What's this rally doing? Inefficiency right here. And what's this wick? Split that wick in half. That's inefficiency. Wicks are gaps. Anytime you're bearish, folks, listen, okay? If we are bearish based on what we think the move's going to be on the weekly chart, is it going to be expanding higher or expanding lower for an objective that can be seen on the weekly chart? That's the beginning of building a bias for the week, not daily, for the week. So that means we're looking for only buys if we think the weekly chart is going to print a candle that's expanding higher. Then you go to your daily chart and you look at, okay, I'm looking for the next areas of interest, these key levels. Where's the market gravitating towards? Where's it moving towards? That's what you're focusing on. So by having that, you're giving yourself an advantage of following along with a higher time bias. So inefficiency, it trades to here, drops. Small little rally. What's it rallying up into? Inefficiency to drop. What's it rallying up in here? Inefficiency to do what? Drop. Inefficiency here. What's it doing after it rallies? It goes right up into small little inefficiency. And this one here, what does it do? Drop. See these highs here? Too clean. Rallies to do what? Take the liquidity there. Then what? Drop. When you're in a sell program, that means you're bearish. You're expecting prices to deliver lower. It's only going to rally to do one of two things. Go into inefficiencies, which is fair value gaps above price, or run out a short-term high.